Well, let's get more on tomorrow's interest rate announcement. We're joined by Steel and Engineering Industries Federation of South Africa Chief Economist Chifipa Mhango and Bureau for Economic Research Economist Hugo Pienaar. Good evening to both of you, and thanks for your time tonight. Look, I suppose depending on which end of the stick one is sitting, if you are a highly indebted consumer, you're grateful for the extent to which the repo rate has been left unchanged. But of course, if you're in retirement, you're singing a completely different tune. Hugo, what are your expectations for tomorrow?
So I think it is going to be a very tight call, but we think the Reserve Bank is going to start a modest interest rate hiking cycle tomorrow with a 25 basis point increase.
Chifipa?
Well, we are on the view of the consumer and on the view of the industrialist. And on this front, we're saying that no, a hold on interest rates at this point is a most positive thing that can happen at this stage.
Let's talk about some of the implications either way. So, Hugo, what happens if the Reserve Bank does begin to slowly increase the repo rate? What is the likely impact of that on the economy?
Well, so I think one has to bear in mind that the repo rate is coming from extraordinarily low level, so the lowest level in multiple decades. So initially, I think the first 25 basis point increase or so is not going to have a material impact. Of course, if you have a mortgage bond, if you have other credit, the cost of that will naturally go up. But again, it's from a low level. And if it is a moderate increase, it shouldn't have a major detrimental impact on the economy. So I think what the Reserve Bank is favoring perhaps, and we'll see tomorrow, but is to start earlier with this cycle. But by doing that, so sort of getting ahead of the inflation curve, it may mean that in overall terms or cumulatively, they actually need to do less. So that is the sort of trade-off that they have to consider at this stage.
And you're bringing me to my next point, Hugo, about really the role that inflation is playing when it comes to the possibility of this hike.
Yeah, so the Reserve Bank has said for a number of years that they prefer to have inflation on average around 4.5%, so the midpoint of their inflation target range. At this stage, we are at around 5%. But of course, it's not that important where the inflation rate is today. It is what the Reserve Bank forecast is over the next 12 to 18 months, and crucially, what the risks surrounding that forecast is. So we don't have an inflation problem, but the Reserve Bank would not want inflation to remain at 5% or above. As I said, they wanted to get back to around that 4.5%. Over time, and also that inflation expectations from households, from firms, that it stays anchored around that 4.5% mark.
Chifipa, let's talk about what happens if the interest rate does not change tomorrow.
It will be a positive thing. I think we've got some massive challenges in the economy at this stage. High unemployment, investment drive is still weak. If you look at the growth patterns point of view, we're still on the weak phase. If you look at the latest figures with regard to retail sales, they have been on the negative side for almost the best parts of this year. We just got new figures on the retail sales, around 2% increase. That's still marginal. So the South African economy is more driven from the consumer point of view. And the consumer spending is very key in terms of the growth patterns going forward. If you want to speak from the industrial point of view, we've got manufacturing sector, which is struggling at this stage. The boost towards the manufacturing sector is more driven on the credit side point of view. So if we squeeze the consumer on in terms of the patterns with regard to consumption, obviously it also affects the consumption patterns in some of the major key sectors of our economy. And also, to bring you another fact, the Reserve Bank has been slashed interest rates by almost 300 basis points for the entire part of last year and this year. So what was the main motivation was to actually drive the recovery of the economy in an environment where interest rates are low. if you look at what's been happening this whole year, interest rates on average, the only time we have had high interest rates, inflation rates, it's actually during the September and October figures. Inflation has not been quite marginal, below 5% on average. So we're still there between the 3 to 6% inflation rate of the target level from the Reserve Bank point of view. So fair enough, we're still in the positive trend. Yes, the pressures in the economy are there from the point of view of what's happening in the oil prices, what's happening in terms of the exchange rate. Those are really worrying signs in terms of what will be the future projections. But at this stage, I think anything to increase interest rates at this point, I think will be more reactionary at this stage. If you look at what's happening in other major economies, such as the US, the Euro environment, they have not actually increased interest rates. They're just warning to say that no, interest rates might be going up on the basis of also what's happening globally, because inflation rate is also going up globally. For example, in the US, we're looking at 6.2%. In the Euro area, you're looking at 4.1%. So the warning signs are there. But at this stage, I think all reserve banks, central banks across the globe are keeping a cautious approach in terms of increasing interest rates at this stage. But yes, there is a warning that no, maybe in next year we might see an upward projection.
And Hugo, let me perhaps give you a chance to weigh in on that in terms of future expectations. So even if we do escape a repo rate hike tomorrow, what does the future look like? Does it mean that the only way is up in many ways going into 2022?
I would think so, and just bear in mind, I mean, I'm not telling you what I think the Reserve Bank should do.
Sure,
I'm telling you what I think they're going to do, right? And I mean, all their commentary suggests, over the last couple of months, suggests that the next move will be higher. So whether it is tomorrow or early next year, I think it's pretty clear that we are, again, from very low levels, we are going to move higher in terms of the interest rate. So I think the question really is just how quickly will they move higher and where we will end up. In other words, will we go back over the next 2 years or so to the interest rate level we were before COVID, or will we actually end up at a lower level even after they start to increase interest rates because the economic environment is different than before COVID?
Let's leave it there for tonight. Hugo Pienaar from the Bureau for Economic Research and Chifipa Mhango for the Steel and Engineering Industries Federation of South Africa.